There are some expenses that are not allowable for purpose of deductions. For purpose of deduction in relations to income tax. These are expenses that are of capital nature, that has not been provided for in law. Although I have already said prior that there are some expenses that are of capital nature, but they are allowable. But those that have not been specifically allowed cannot be deducted. So expenses of capital nature cannot be allowed. Example of expenses of capital nature could be those expenses that for instance, I like giving examples of a developer of rental premises. Could be those expenses that have been used in developing that house, the capital cost of developing that house in order to, therefore, which is going to be used in generating the income, cannot actually be allowed as a deduction against the rent income. So other expenses of income taxes that have actually been paid by a person also cannot be allowed as an expenditure against the income earned, because income tax is a tax on income, and therefore if it is allowed again, then means you are also reducing the income that is supposed to be subject to tax. So other expenses like compensating taxes cannot be allowed. So generally expenses of personal nature cannot be allowed. These are expenses that are may have been incurred by the owner of the business, and therefore they are expenses of personal nature, like school fees for his children cannot be allowed against the income or from his against the income that has been earned from his business, because those are generally expenses that does not go into the productions of the income or earning the income, but they are actually expenses that are actually geared towards maintaining the personal nature of a person who is actually carrying out the business, that is the sole proprietor or a director of a company. So those are expenses that generally do not go in as a deductible expense against the income earned. The books of accounts of a person for purpose of accounting for taxes are supposed to be kept for a period of 5 years, that is by law. And therefore, if a person, the main thing as to why you actually need to keep your books of account is for purpose of supporting anything that you have put in your return of taxes, so that if the commissioner wants to come and examine them, he can be able to examine within that period of 5 years. The income that is supposed to be subject to tax is prescribed. At the moment, we have 288,000 Kenya shillings as the minimum amount that is not supposed to be subject to tax. That is the maximum amount that is not supposed to be subject to tax is 288,000. So anything above that is supposed to be subject to tax. Note now, the issue is that we are not actually taxing when you exceed 288,000. If you go to 289,000, the entire amount of income, that is 289,000, would actually be subject to tax. But the amount of taxes, because of the reliefs, would actually be reduced by the amount of reliefs, and therefore at the end of the day, even if you are earning more than 288,000, still you will actually be subject to relief, which of course would actually make your income, even if you are earning more than 288 because of the reliefs, then you will still not be subject to tax on any amount that is up to a maximum of 288,000. The first mode is installment taxes. That is one of the methods of accounting for income taxes. Another one is also at the end of the year, you also need to file returns. Even though you have paid taxes through installment taxes, still you will be required to file a return of income. So that is also another mode of accounting for taxes. This is a mode whereby a person is paying his entire taxes for a whole year through installments. And how do we determine installment taxes? We determine installment taxes in two situations. Number one, Where a person has been paying taxes before, we look at the past performance or the taxes that you paid the previous year, and you grow it by 10%. So if, for instance, you have paid, in this year, you have paid 100,000 Kenya shillings in this year and last year, then this year you have got to grow that 100,000 Kenya shillings by 10%, meaning that in the subsequent year now that we are looking at, if we were paying in 2019 100,000 Kenya shillings, in 2020 we will have to grow what we paid, the amount of taxes that we paid in 2020 by 10%, meaning that we are going to pay 110,000 Kenya shillings as our estimated taxes for 2020, and therefore we divide that 110,000 Kenya shillings by 4, meaning that it is around 20, almost let's say 120, not 100, let's say 110,000 Kenya shillings divided by 4, we are getting a figure of around 25, around 28,000 Kenya shillings. Yes, around 28,000 Kenya shillings per quarter. So each and every quarter you are supposed to pay that amount, and therefore for each quarter, the first quarter, if your accounting period is ending on 31st of December, that means for every quarter that means on or before 30th or 20th of April, you are supposed to pay your first quarter of 28,000 Kenya shillings. The next quarter would be on or before 20th of June. You will pay another 28,000 Kenya shillings, and then the third installment would be coming in September, which is 28,000 Kenya shillings, and the last installment would be on or before 20th of December, which is the fourth installment. And therefore, by come 31st of December or come 20th of December, you have paid all your 110,000 Kenya shillings at the end of that year. That is installment taxes.
Who qualifies to pay for installment taxes?
Now, any person whose one is that corporate bodies, all corporate bodies are supposed to pay installment taxes. Number two, if for individuals, for you to qualify to pay installment taxes for individuals who are in business, if you are earning an income or if you are paying taxes in excess of 40,000 Kenya shillings, then you will qualify to pay taxes through installments. You can amend as many times as possible, as long as you find that your return is incorrect. So you are actually given by law to amend the return, so that if you find so as to correct any anomaly in your tax returns, and as a consequence you can amend as many times as possible, depending on, because at times you may find the informations that were missing, you have already gotten them, and therefore it will give you an opportunity to amend your return. The date of filing for returns in case of business income would be on or before 20th in respect of business income when it comes to installment taxes, and when it comes to filing returns, end of year returns, it is on or before 30th of the following year. That is if you are to file your business income returns, and if in case that is in respect of a person who has his accounting period ending on 31st of December. For any other person, it is on or before 30th, on or before the end of the 6th month upon which a person makes up his accounts. Meaning that if a person who is having his year end as 30th of June, then he is supposed to file his return by 31st of December of every year. And when it comes to issue of payment of taxes in respect of that return, we have what we call balance of tax. It should be on or before 30th of the 4th month. Now, income tax returns, if a person does not file his return, then the penalty depends on the nature of okay, when it comes to individuals, it is 1,000 Kenya shillings if you fail to submit your income tax return, or 5% of the tax due, whichever is higher. And when it comes to corporate bodies, the penalty for late submission of a return is 20,000 Kenya shillings, and or 5% of the tax that is supposed to be due.